This podcast is brought to you by the award-winning prop firm, Crest.
I just wanted to be able to get more money than what I'm getting in my savings account, more money than what I'd get in a bond, and at least try and be on track, if not greater than what, the average stock market's producing, around 10% per year. So I was happy trying to generate around sort of 2 to 5% every month consistently. Once I was able to get my head straight, I just formulated a plan, a 12-month plan. So I built that, and then I started doing some networking on LinkedIn, showing some guys my track record. And then I found a guy who I was working with who funded me, essentially gave me some backing. And then I took that leap of faith. If you and I are supply and demand traders, you could draw a zone completely different to me. You may have your bodies of your candlesticks in that zone and leave the wicks out. I may do the opposite. I may have the whole candlestick in that supply and zone. So it's just subjective on that front. Trading is freaking subjective. Just learn the basics, understand the workings of candlesticks, why they move the way they move, understand very basic supply and demand, and just find something that works for you and just stick to it and optimize it. Bro, I still use it. It's a habit. It's part of my life. So I have to. I feel like implementing that is a life hack.
Episode 229. All right, folks, we've got Ken Chigbo coming up on the show today. He has an amazing story to tell in terms of how he went through pretty much the entire trading industry before becoming a trader himself. That's coming up in a second. You're going to get so many insights in this interview. Trust me, it's a doozy. Plus, we have on the channel this week Brandon Abbas back to give you a 5-step simple trading plan that anyone can master and a super simple way to remember it as well. Plus, we've got the live streams. Make sure you check those out, either the live market trading or the pre-market analysis stuff coming up this week. And if you do want to be on the live streams, then there's a link in the description. Just go down there and click it and you can enter to win. All right, folks, other things going on here. We've got the $1 trial of Robot Lab Live. In fact, next week we are starting on a new build here. This is where we're building out a trading strategy that one of my members has come up with, and we're turning it into a fully automated trading robot. We are doing that on a weekly basis. You get a $1 trial and you're going to get to join this next build if you jump on board now and get to see that whole journey. All right, folks, that's enough from me. Let's hear from my sponsor and get on with the show. Crest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So one thing that really sets Crest apart is their no minimum trading days requirement on their challenge and verification stages. On top of that, traders who successfully pass the challenge and verification stages are eligible to receive a bonus payout of up to $30K on top of their funded stage profit split payout on performance. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more. All right, folks, here we are on Trading Up. We've got Ken Chigbo in the house, aka Ken the FX Freak. So if you know him by that name, welcome to the show, Ken.
Oh, thank you very much, Cam. Absolute pleasure. I've been wanting to get on here for years. I know you've been after me a little while ago. So it's good to finally get on.
It was a while ago. I didn't think it was going to happen. I gave up in the end. But it's so good, so glad to get you on. Now, so the guys that don't know you, we're going to go through your story to start off with, how you got into trading. We'll probably dive into that a little bit more deeper, and then get into some of the technical aspects of what you're doing here in the here and now. So, yeah, how did you get into 13 years ago? How on earth did it all start?
How it all started, well, I'll put it in a nutshell. Essentially, between the ages of 16 to 18, I got a position in the summers to work on the trade floor. So I was a runner. I was essentially getting the traders, the prop traders, their breakfasts, their lunches, their dinners, their dry cleaning, you name it, all sorts. So I've been doing that through the summer. Then I was going to go to university. I didn't quite get the grades I needed for my chosen university. So I was a bit like, oh, sugar, what am I going to do? Reach back out to this company. They put me on the floor again as a runner rather than going to university. And then I was so hungry. I was showing how tenacious I was, because I saw all these traders on the floor with all these emotions flaring. These, at the times, these are fixed income traders. They used to trade the old system called TT ladders, and you're seeing all the prices flickering. And I was so intrigued. So eventually a group of analysts that were on that trade floor, who are feeding sort of information to these traders, approached me because they saw just how hungry I was just to be, involved and want to grow. And they offered me a trial to be an analyst. Okay. So they brought me in. My role was to essentially absorb all this sort of fundamental news. So all the workings of asset classes traders are trading fundamentally, right? And then feed and relay that information over and make it in actionable form. So I did that for a good, just over 4 years. felt like I hit an earning capacity, learned a lot of knowledge, and then wanted to take that and further into the industry and make some more money. So I went into foreign exchange broking, like deliverable FX. I was helping companies manage their foreign exchange exposure. Again, the corporate world started to take its toll on me. I went into a bit of a downward spiral in terms of like my mental well-being. And then I was able to get myself into a stable position to then formulate a plan. And that plan was ultimately my passion and the knowledge that I generated and what I'd proven that I could do in terms of extracting money from the markets. I then took that leap of faith, and I had enough capital. I had a bit of private backing on my case for me. And then, I left my role in the city. And then here I am today, just to bring that into a nutshell for you.
Fast forward extreme. So back thinking about back then, I mean, were you sort of tinkering with trading, putting positions on and stuff at the point where you were, in that 4-year fundamental cycle where you're, just doing analysis and at what point did you sort of think, well, maybe I should just utilize this and get in there?
Yeah. So I was dabbling in initially via form of spread betting. Now, years ago, trading fundamentals was extremely easy in the sense of we were not competing like we are today with all the algos, with all the machines. Then it was just how quick are you as a trader? How quick are these fingers? So we'd have, like, as an example, we'd have a piece of fundamental data. That data would hit the wires and then you react. You're either buying or selling. If we've got stronger GDP from the UK, you're quickly buying GU. It would give you that opportunity. There was that split second of just being able to execute quick. We'd have this move to the upside. We'd consolidate a little bit. And then it'd be another opportunity to get in again before it pumps higher, depending on how the figure was. So that was my first sort of step, just trading purely fundamentals. I looked at the charts as an analyst, of course, but I just tried to trade purely fundamentals, which went well initially, but then outside of when there was data, what the hell was I doing? I had no plan, I had no strategy. And then that's when I, start seeing myself losing money quite consistently because I was trying to trade outside of fundamentals. So yes, I did trade through those 4 years as an analyst. It didn't go too well initially. I went through a process of trading just fundamentals. Then I found a technical strategy, which was absolute mess. As you can imagine, when you first started analyzing the chart, you've got lines everywhere, Fibonacci's, MAs, you name it. But then there was a guy on a trade floor, someone that I used to give information to because we'd sometimes get little whisper numbers before data. And in exchange for that, he sort of sat me down every evening or whenever he had an hour or 3, and we'd go over a supply and demand strategy, which I learned and proved to be quite profitable for me, or it was suited the way in which I approach the market from a fundamental view, just finding those big areas of where the sellers coming in, where the buyers coming in. But still at that point, I was failing. I wasn't doing too well because I'd learned the fundamentals. Yes, I'd learned a good strategy, but my head was still not right. I didn't understand that psychology played a massive part. So yeah, that took me some time as well.
Right. So, and then you got to the point where you moved to the brokerage and then left the brokerage firm to start out on your own. What, as a full-time trader at that point, was it with capital and?
Yeah, exactly. So I had over those years from the analyst and then obviously to working as a broker, I still every evening, every free time that I had, I'd work on my strategy, how I approach the market, working on myself psychologically as well. And I eventually once I went into that downward spiral, as I was saying before, just about being in the corporate world. I decided, I actually read The Secret. So the book Secret, if anyone hasn't read it, that saved me. Actually, that was my saving grace in terms of changing the way in which I was thinking. And it got me out of that period of depression, actually. So once I was able to get my head straight, I just formulated a plan, a 12-month plan to prove that I can to myself be consistent. Okay. So built up a track record. I could be consistent, extracting money, low drawdown, stable gains. But then also at the same time was trying to save some capital. I obviously through the industry that I was working in, it was very lucrative. So I was quickly able to build that capital, but it wasn't right for me until I actually had a good track record. So I built that. And then I started doing some networking on LinkedIn, showing some guys my track record. And then I found a guy who I was working with who funded me, essentially gave me some backing. And then I took that leap of faith. But Cam, in those first 3 months, so obviously I got to my desk, I was all excited, like my desk at home after I'd left the corporate world. Got to my desk, coffee in the morning, just excited, like, yes, this is it now. I'm a trader. From that day, all hell broke loose. From that day, for a solid 3 months, it was awful. I don't know what happened. Everything went out the window, which was scary. Which was scary, and I think it came down to just a couple of things. One, again, the psychology side of things. I need to make some bread here. Otherwise I'm screwed in some sense. Obviously, I had savings and etc. But then also I had to adjust my strategy a little bit. It just wasn't working. So I had to make adjustments, took some time out for 2-3 weeks and then approached back. And then some sort of from that middle of the 4th month, things started to pick up again. And then I found my rhythm. Yeah.
It's always the way, isn't it? Now, on that track record that you had where obviously somebody saw it and they thought they'll give you funding on the back of it. I mean, can you sort of walk us through the stats around that track record? Like, example, how long was it, the ROI on it, and maybe something else, perhaps like a profit factor or a win rate or some other stat that they thought they looked pretty good.
So the first thing of course, the first thing for me was to keep the drawdown. Well, my goal was to keep the drawdown under 10%. I fell short of that slightly, got up to around 12.5. In terms of like what I wanted to target each month, I always said to myself, look, as a person over those years, I lost a lot of money, and I extracted my statements and it was horrifying. So while I was going through the process, everyone goes through the process. So I was quite risk averse. So for me, I just wanted to be able to get more money than what I'm getting in my savings account, more money than what I'd get in a bond, and at least try and be on track, if not greater than what the average stock market's producing, around 10% per year. So I was happy trying to generate around sort of 2 to 5% every month consistently. On average, I was doing between sort of 3 and 5%. Over the year, as I said, it was pretty solid. I mean, in terms of my win rate, my percentage, I was looking at about 55%. So I wasn't overly successful in terms of when some people have a greater win rate. How I was operating, it wasn't. But I knew that every other trade, more or less, was going to go in my favor. And were you basing on like fundamentals as well as technicals at that point, or was it more sort of swaying one way? So it was for example, my fundamentals played a part in. So there's themes, right? So maybe back then we had a theme of Brexit. So we had the situation of Brexit early on when I was trading. My baby was GU. So, for example, depending on how well the talks were going, so I keep in line with the themes. What was someone talking about? Are these Brexit talks going well? If they're not, then it sets a fundamental trend. Like as we have a trend technically, if the market's trending to downside, we'll have a trend or a theme fundamentally for a currency. So I'm always staying in line with those themes. So if I know there's a negative bit of news going on around GBP, typically we should be trending to the downside. So any rally that we're potentially seeing is subject to being sold. Now, when we're seeing that rally, then technically I'm looking at how am I going to get my entry? That's when I'm looking for my entry technically, coming up to those key areas of supply. How is the candlestick responding in those areas of supply? And then looking for very basic sort of chart patterns, such as, flags, bearish pennants in this case of that. And then looking to sell that rally essentially, because I knew the fundamental tone is negative. Just to put, that's how sort of I'll use the fundamentals and the technicals.
Okay, and so I mean, a 12% drawdown on an account over a period of time with 3 to 5 a month. How long did it take you to get out of that drawdown? Can you remember?
How long?
Yeah,
I wouldn't be able to tell you, buddy.
It would have, but it was steady, a steady growth. It wasn't like I just shot out of it and it was there.
No, not at all, bro. It's always steady. As I said, I've been in I've been in the trenches with my accounts, in the past. So it's always gradual. That's how I operate, small wins, small losses, ideally. So, yeah.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
Yeah, and so you jumped into doing it yourself. You struggled initially, took 3 weeks off to turn it around. What happened when you got back? How did that pan out?
It's a good question. What happened when I got back? To be fair, I had enough time to recover, sort of psychologically. I feel I took that break, and I came back with that fresh enthusiasm again, but a little bit more patient. So when during those 3 months, I found like my patience just went out the window. So, I'd be jumping the gun with my trade. So I'd be getting in too early. And then later on in the day anyway, I'd see that GU, for example, had gone in my favor. If I'm looking to buy, it just kept going against me. But then later in the session, we started rallying. So I had the bias correct, but I was just too impatient. So when I approached again that month 4, it was like, look, I just kept reminding myself, patience pays. So let me just wait a minute and try and get a better entry, and sit on my hands a little bit more and stop getting caught out in these fake outs that are occurring all the time. But then also I established a trading time that I must follow in terms of stick to. So for me, it was not jumping into trades ahead of London Open. There was too much volatility there, but I was trying to think, if I get in early here, this is great. I'll get a good entry. But no, I was getting stopped out all the time. But then also it's waiting for allowing the London flow to calm down and then entering at about 11 o'clock London AM, then not trading past 3 p.m. So I had a specific window that I established as well. So I really, really narrowed down and optimized after sort of reviewing all those stats on my initial trading front of those 3 months. So,
it's interesting. I've got a couple of questions on that. So number one is in fact, it came from an interview I did earlier this week, and the guy at the end of the interview goes, there was something I did want to say, and that was that, and we can get to it now. It was when you go trading out on your own, or he said, I recommend people get like some kind of other income to be coming in to stop that psychological impact of like, man, this is it. I've got to make, I'm making money through the markets only. I've got nothing else. Whereas this guy had like a consultancy that he had the odd job for here and there. Did you have anything like that to help you when you sort of made that shift from corporate to sole trader?
Yes, I did. That's a good question, actually. I actually did. So I started creating content. Initially, as soon as I'd left that corporate world, I started pushing out content via IG, Instagram. I think I was the first person to actually show my face on Instagram and the first person to come on and start talking fundamentals. So I got very quick traction. People are like, whoa, what is this? So I built up quite a quick following. And then I was able to secure some broker sponsorships in terms of producing content for them, mentioning their name, as simple as that. So that actually provided a little bit of bread and butter. It wasn't much by any means, but it was still a little bit of a cushion. So and just writing little bits of analysis for them. So that was a little bit of a help as well, to be honest with you.
And it's funny because I think a lot of people out there sort of believe that, okay, I'm just going to trade and I'm going to give up my job and go and be a trader. But it's, I suppose, what they don't factor in is that psychological aspect where it's gonna hit you, right? Because all of a sudden, this is it. This is, you've gone from one single source of income to another. There's no fallback plan, and this one comes with risk every single day.
I think that's a very good point that you've made. I feel people are very quick to just want to take the complete jump, and I get it, but it is good to try and have another source of income, because look, I know these markets can be extremely lucrative, but they can be a killer as well. So they're unpredictable. There's times where we may not get paid. There's times when, I've gone through losing streaks and I'm not getting paid. But if you can have that source of income to supplement any potential downside that that may happen. It will take a lot of mental strain off you, a lot of mental pressure and away. So yeah, I think it's a good idea to try and have that as well.
And I suppose this day and age, you've got prop firms as well, where you can, instead of just trading your own capital, you've got, access to other capital. Now, one thing I did want to jump into was habits. And it sounded like when you were talking about how you structured your day and found that, okay, right, now I've got a window that I get in on. Do you find that there's like part of becoming a successful trader is creating trading as a habit and finding like what is that habit you're going to always do and doing it like, sort of like your morning routine kind of thing? Have you got any views on that?
Yeah. So, for me, well, before I get into sort of the routine that I follow, firstly, I'll go through my morning routine, right? I wake up, obviously black coffee. I'm digesting all of the news fundamentally, all the fundamental news is going on because I want to be in line with the influences of the asset class that I'm trading. I think it's so key. I know people are very quick sometimes to overlook fundamentals, but I think it's so key that the inner workings, the macros of what's going on with the currency or the instrument that you're trading. So as a routine, as a habit, understand what's happening. What are all the talking points right now with that? All you have to do, if you're trading gold, just type into Google News, gold. And there's tons of articles being written so you can understand, what's influencing it at the moment. Before we had the big rally for gold with SVB, gold's rallying at the moment because the FOMC may not be, maybe pausing rates, all these things. And anything that you don't understand, make it a routine to write down and then put things that you don't understand that you're reading into Investopedia, into YouTube. So that's the first habit I think to do. The second is to be aware of yourself fully, because during my time, I obviously while I was growing and learning as a trader, I had a routine. I had a journal. Like every trader should have a journal. But what a lot of people missed out on that journal, something that out of my own sort of discovery, I added a tab on my journal, which was emotion. How did I feel on that day when I woke up? I found, and it may sound cliche, but it's true. I found every single time that I wasn't feeling great, and there's times when I just wasn't feeling great. I may have had an argument with my partner. Something just may have happened to me in the week, whatever. On those days, I was not profitable. I was making stupid mistakes. So make it a habit to be aware of yourself. Write down in your journal, like you would as when you're growing up as a kid. You have a little journal. Have that in your trading journal. How are you feeling on that day? Check yourself before you wreck yourself. Yeah. So that as well. And then as a final thing, as another habit, I think keep yourself active as well. So yes, be enthusiastic and be in front of the screens to conduct your analysis, but make it a habit to get out and away from these screens. Otherwise, they will overconsume you, and you end up doing things that you shouldn't. You end up jumping into other markets that you're unaware of. So take that time away, whether it's going to the gym, go and walk your dog, whatever the case may be, come away from these. So those three things, I think for me, are quite key.
It's ironic because you sort of, I think a lot of people feel unproductive by doing that because it seems counterproductive, but in fact, it's the other way around. It is productive. It's really weird. It's really weird. And I think that's why a lot of people struggle, because it is just sort of like completely the opposite of what everyone wants to do. It's like, I should just work, and the money will come. Whereas in this case, it's like, try everything not to jump on the charts, then go on, and when you're feeling good.
Exactly.
Fundamentals, funnily enough, and we mentioned it before the show, like a lot of folks that I've had on recently have had quite a heavy fundamental bent to what they're doing, and they all seem to be doing pretty well. And I'm actually, even because I've had no fundamental bias whatsoever, really, and probably until the last few weeks. And now I'm like, things that are quite drastic and strong, where I'm noticing them and going, well, why did I just get in that short when that currency is clearly strong and the other one's clearly weak? Why am I getting in the short and getting kicked? It's like, why am I not focusing more on the fundamentals? So, I mean, what is your view on sort of like, if somebody wants, I mean, you're giving us, start the day off, jump into the papers and stuff, Google, whatever, get the fundamentals. I mean, how can somebody, how would you say to best distill it down so it's like a step-by-step process of, now I've got my fundamental bent and I can trade one direction on this pair or whatever it is?
Yeah, that's a good question. So for me, what I did and what I still do to this day is an Excel sheet, right? Have an Excel sheet to say, for example, you want to trade euro dollar. Compile all the data, very easy to do. So, I'd have different fields. So GDP, growth of the Eurozone, inflation, the labor market, all of these things. So I'm putting in all the data over the each month, what we've come out in terms of most recently over the last sort of 6 months, 12 months, however long you want to go back. So you want to try and establish how strong is the euro, economically. And then you want to do the exact same thing for the dollar as well. All those data points, also what the central bank is doing, where interest rates are at, all of those fields, put them all in. Now, my friend, you have started off as a fundamentalist. You are now comparing economic data. How is this economy forming versus that one? So I think that's the first step. And it's very simple. Just type it into, for example, the BLS, the Bureau of Labor Statistics in the United States give a lot of data, and just go onto the ECB's website. You'll get inflation, all that. So the data's out there for you to find. It's very easy to obtain. Off something that just slipped my head is Forex Factory. All the data's there as well, the historical. So just input it into a spreadsheet and then start analyzing that way. I think that's the first step.
And would you use that in back testing as well? If you were going to go back and have a look at the charts and go like on the 31st of October, 2022, this news event happened. Let me go back and have a look. And did the market trend for 2 months after that, or that kind of thing?
100%. And once people start, definitely. So with certain data points as well, that the high impact stuff, if you go back, look left of that chart and go to those specific dates, you will see how certain data points set new trends for currencies. Certain themes set new trends. One of the most recent ones, if you look back around October, November of last year, 2022, we saw the dollar end its bull run. The reason it ended its bull run, go to the exact date, pull up your Forex Factory, check. It was lower inflation. Inflation started to cool in the United States. So markets are now pricing, big players are now pricing less aggressive action. So the dollar started selling off. So yeah, you can go through and back test that and find those key economic data points and timestamp them on a chart. Easy.
And on that, have you ever sort of or can you remember a time where you saw some back tested bit of information work, and then that thing happened again in the future, and you're able to go, because I'm guessing this will be quite some time in the future that these major events happen, and you're able to go, right, this has happened. It's opposite of that, or it's the same as that. I'm going to do exactly the same what happened last time. Has that ever happened? And have you got any sort of great trade stories off the back of it? I'm clutching at straws here.
Well, to be honest, yeah, it's a good question, mate. In terms of me using that information that I just said, in terms of, going through and checking the historics, I still do that to this day. I don't really have any great trade stories as such. I have really bad trade stories in that front when I tried to trade, Brexit when Brexit occurred back in June 2016. That was an awful time for me. So for me, I spread my risk over 3 brokers. Still do that to this day. Back then, I anticipated. Again, this is where my fundamentals went wrong. But who would have predicted it? I predicted that the UK were going to remain in the EU. I had some shorts with GU. And then obviously on one of my accounts, it got completely wiped, completely. So a third gone, just like that. So that was a horror story, to be fair. And as I say, it's just as fortunate that I did have, my risk spread across 3 accounts, but it was still a big hit. But in terms of good news, you start to establish patterns. You start to when you're in line with the fundamentals and what's going on, you're going to start be able to anticipate more correctly, get things more right moving forwards. But I still think it's key to tie that in with your strategy technically as well. Sometimes things go in hand. What you'll notice actually as well is, yes, in the past you've seen dollars reacted like this to this certain piece of data, and then you can have that in your head now with your strategy moving forwards. Like recently, we had in the dollar index, we had a nice little head and shoulders forming. You pull it up on the daily or on the weekly, you'll see. And we just recently broke out of that to the downside. Again, because the FOMC are not going to be raising rates. It looks like they're going to be pausing. So things just go hand in hand as well. And you'll start to see those sort of patterns form on the charts as well when your fundamentals are just going hand in hand with the technicals.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot. And so from a technical point of view, you obviously learned supply and demand. Did you carry on learning, or do you still learn to this day, or have you sort of come up with your way of just getting in and you're happy with it now?
Yeah, to be honest with you, Cam, at the end of the day, I find every single piece of analysis, technical analysis, is subjective. You know, I know you get all these people talking about SMC and God knows what. There's all these things popping up. But I feel every piece of analysis is subjective. Like if you and I are supply and demand traders, you could draw a zone completely different to me. You may have your bodies of your candlesticks in that zone and leave the wicks out. I may do the opposite. I may have the whole candlestick in that supply zone. So it's just subjective on that front. And I think for me, I've optimized what I do, but what I find works for me, you know, and that's it. Yes, I still, when you're saying, do I still learn? Yes, I am. I had to recently, after the pandemic, I had to change my strategy a little bit because of the way in which the market was moving. It didn't suit my strategy, clearly. It just happened. Conditions happen. So you always have to optimize, otherwise you'll get left behind. So yeah, I am still learning. I'm forever learning in this game and optimizing what I do.
And at what point do you sort of because this always intrigues me. You sort of say, okay, look, this, for whatever reason, this strategy is, you know, losing too often, or whatever it is, or the wins just aren't, you know, it's not reaching there. At what point do you say, I need to make a shift? And I actually came across the other day looking at a bot that I was running, and it had things like 6 losing trades in a row, and I was like, oh man, is this it, after a good run? And I was like, is this, what is going on here? Is this thing just falling off a cliff here? But then I was able to go back and have a look at the 10-year report and go, okay, the maximum number of trades it lost was 8 in a row. So 6 is okay. And now it's actually come back and it's growing again. So I had something to work on. At what point did you I suppose go, this strategy just ain't like surviving through the coronavirus for whatever reason? Was there anything you can share with us there?
Yeah, I just want to say something actually quickly, just because just for anyone listening. What you just said there, you hit the nail on the head in terms of actually going and look at the report, you know, the data over sort of a 10-year period, and you really broke it down in terms of the stats. I think people are very easy today to jump the gun, you know, away from quickly try and switch their strategy to try and find this holy grail, if you like, you know, and are too fixated on the short term, you know, looking at trading on a day, looking at trading on a week, on a month. No, but it's month after month, it's year after year, you know. Don't be caught up in the noise within a day, you know, just because I haven't been profitable today, I haven't been profitable this week. Man, this is a long-term game. You know, if you want longevity, this is over the long term. So in terms of, for me, to be honest with you, I started changing things up after a 2-month period of just straight losses, like in terms of negative months. And the reason being was the markets just got super aggressive for my strategy. So I established that, and I just knew it just wasn't going to work. So I made adjustments.
I do remember back then it was like the spread on EU was like 2 pips or something versus like, well, was it 2 pips, or it was big. It was like the moves in the market were humongous.
They were massive. Yeah. We were having, you know, days like trading ranges, like when you look at GJ, it's like 400 pips, crazy things like that. It was immense.
Yeah,
for a good period.
Huge. Yeah, it was okay. So now let's dive into some stats around like your trading now, and in fact, and a few other things. So like, I mean, what time frames are you focusing in on to start off with?
Yeah, so I'm looking at the daily chart. and I'm dropping down to the 4-hour chart for my entries. So yeah, I'm more longer term, just because, as I say, with my fundamental view, I have a specific, I have a view of where, say, for example, well, my baby usually is GU, but I trade all majors now because I'm just in tune with everything, across all markets. So I'm looking at the daily, and I'm looking at 4 hours for entries. In terms of how I trade, as I said, on a supply and demand level.
Yeah. Okay.
What else is the question there? Sorry.
That was the only part. That was the first part of the question. So on that, do you have? I'm just trying to put. So when you set your trade up, right? Do you have like a fixed target and a fixed stop, or how do you manage your trades along the way?
So in terms of fixed targets, for me, in terms of actual pips, you talking?
Well, just no, more like do you say like, all right, my take profit is here, and that's forever and a day, never going to touch that, or do you manage the trade somehow?
Yeah. So Cam, for me, I'm always all I'm simply doing is I'm looking left, right? I'm looking left at how the price has responded. So if I've got a zone marked up of where I've entered, right? I've just entered a zone because say an area of supply, the price has broke out, retested, and it's held. Okay, this is we've got some new comfort here. So I am looking for, ideally for longs, we're trending to the upside. I'm looking left. I just want to see where the next zone is. And how I'm validating that is, okay, this zone here has acted as both supply and demand in the past. You see the price has entered it. Previously has found resistance. You've seen the price has also found support there as well. So that's a valid zone for me. So I'm just looking left where the next major zone is. And that's where I'm ideally targeting. And then the stop I'm placing below that demand area, and I'm leaving a little bit of breathing room in case we get any sort of fake outs or any short-lived sort of wicks to the downside. And then in terms of like how I'm managing my trade, to be fair, I'm always looking to take partials because I am extremely risk averse. And I know how quickly things can change. I know how we can get a lot of noise in between. So I always want to pay myself psychologically, because it's just numbers. It's just, otherwise it's just so gamified when you're looking at EMT4, EMT5. It's not your actual money until you're actually removing some of that profit and paying yourself. So that's how I deal with that.
And what kind of risk, how are you managing the risk in terms of, do you take a percentage of your balance or your equity, or what does it look like?
Sorry, what was that?
Oh,
Cam?
sorry, from risk. Like, do you just risk a fixed lot size or a percentage of your account? How does that work?
Yeah, see, I stick to 1 to 2%. As cliche as it is, it's true. So I will go up to the latter, towards 2%, when I am everything is completely aligned and I'm extreme, and I have multiple confluences. Literally, I'm usually looking for 3 confluences minimum to execute on my 1% risk. With the 2%, anything above that, then great, I'll risk 2%. So yeah, that I stick to that because I know in the past, I've risked 3%, 5%, but then when I have those leisure streaks, they very quickly add up, and that's account gone. Kiss your account goodbye. Yeah. So yeah, 1 to 2% I stick with. It's there for a reason.
And do you ever, like, I suppose, looking at that, varied risk, do you ever get to the point where you're like going, where you do a 2%, okay, this is a 2% setup, loses. And then the next one you're like, well, that's a 2% setup, but I'm going to take a 1% setup, or does it somehow like screw with you, or are you lucky enough or good enough to get a 2% actually working more often than not to pay for any 1%, losses that just come along?
Yeah, fortunately at the moment, I am like, I do, my 2% do pay off a lot more. And to be honest with you, I'm never beaten when the times come, and I do go on a losing streak of my 2%. Whenever that happens, by the way, if I have a beaten situation of a run of a loss of 2%, and if I ever feel like my confidence has taken a hit, I drop it all the way down, Cam, and I come back and restore that confidence. I still need to do that at times. When I'm saying restore the confidence, I'm talking just risking 0.25%, 0.5%, 0.75%, and work my way back up again. It's a long-term game, as you know. So I know people are very quick to easy that to turn into a downward spiral and chase that money back, or just want to make the money quickly. No, just easy, gradual.
And so, like, you sort of talked about taking partials, which makes sense, and you get paid. I mean, what if you had to sort of like work out, okay, at the end of a trade, or well, let's say a trading week, what's your average risk to reward kind of ratio, factoring in the partials and stuff? I mean, what does that look like? And because I think it's quite interesting, to see whether or not, like, it's positive or even slightly negative risk to reward, that is.
No, typically my risk to reward around 1.5 to 2, for my trades. The reason being, as I said, my win rate isn't the best. I'm looking just over 50%. So I need to be hitting that minimum risk to reward of 2, ideally speaking. Ideally.
Yep.
Yeah.
Okay. So and where would you take partials? Is it varied, or?
Yeah. So why I take partials is a few different factors. For example, a bit of fundamental news has come out and changed things. Whether it's a central bank speaker has said something, or a piece of economic release has come out and it's shifted the trend to the downside, or whatever the case may be. So that would be one factor looking to take partials. The other is sometimes, as I say, every bit of analysis is subjective. So that level, when I said that zone where I said I'm looking left and seeing how the price has responded there, I may have miscalculated that a little bit. So I've just seen now, if I just put a horizontal line at where the price is failing to break, I can see is actually resistance there. So then that I'd be taking partials there as well. So yeah, just a few different factors.
And on a 4-hour chart, I mean, how do you manage that across the course of the day with I guess, you probably on a 12-hour basis, you can have 3 candles. Then you got to go to sleep at some point. I mean, how does that come into your lifestyle?
Yeah, I mean, no, it's beautiful actually, because for me, it allows me to live my life. I generally take the approach, Cam, with set and forget. The higher time frames allow me to, and with my zones, give me enough cushion to not worry about all the noise. I place my trades once I'm comfortable with, as I gave an example there. If we've seen a nice little breakout of a supply area, the 4-hour candlestick has come back in. We've seen that hold. We formed, say, for example, a nice little morning star, suggests that we're going to, so on that pullback, excuse me, we've seen a nice little morning star form, and then the momentum shifting to the upside. Then I leave enough breathing room below that former supply, now demand, leave enough breathing room, and I sort of set and forget and allow that position to run its course. Obviously monitoring through the day and obviously the next day to take those partials. So yeah, it doesn't really affect my lifestyle in the sense that I need to be constantly glued to my terminal and my trade.
What I'm interested in finding out is, like, so you say you trade the majors, right? So there's like 5 or 6 of them, depending on if you trade every single one. So usually they've got some kind of red news coming out once a week on at least one pair. I mean, how do you manage the red news that's going to come out on, like, let's say non-farm payroll or something like that on a Friday? Well, maybe that's not a good example. Let's say an interest rate change on like a Wednesday.
Yeah.
I mean, how would that affect your trading week? What would you be doing? Would you be trading through that, or would you be avoiding it like the plague?
Yeah, well, it's a good question. It is subject to change depending on how big the event is. So, okay, let's use your example of the FOMC. Now, I'd have to go into a lot of detail here, so I'm just trying to put it into a nutshell. At times, right, when we've got big events like that, you don't want to be trading, especially. I don't like to trade on a Monday anyway, because this is the time people are just getting back to their desks. But then on a Tuesday, typically, the markets will be positioning one way or another for this central bank action, depending on what the forecast is. So, if, as an example, the FOMC are, what was this decision? The latest decision, they hiked by 25 basis points. The pricing in was 50. Interestingly, if you look on the Monday, Tuesday, markets were actually anticipating of a less aggressive Fed. So we're actually seeing the dollar weakening heading into that. So how do I position heading into it, I go with it's a good question. You throw me off here because it changes a lot. But typically speaking, I'd say sit out ahead of the data. Okay, I'm not going to overcomplicate it. Sit out ahead of the major news event. Then what I want you to do is digest to see what's happened. Okay, in terms of what has happened with the FOMC, and then see how the markets interpret it. Right, and then that's going to be setting yourself a new trend. In terms of new trends. So if you look most recently with the dollar, right, if we go back to when they just hiked by 25, not 50, okay, after the event, okay, you don't have to worry about all the noise trying to trade it, but after the event, there's a new trend that's been set to the downside. So now the dollar's vulnerable, the rallies are being sold. So my suggestion is just to wrap that all up again, don't even bother trying to trade ahead of the event. Allow the markets do what it'll do because there's a lot of positioning going on. Sorry, I know I probably confused you at the beginning.
No, you haven't. That's the answer I wanted. I think. That's what I was wanting to see. Are you sitting out or are you sort of going?
So initially, let's sit out beforehand, digest what's actually happened. Don't even still try and jump in straight away. Digest what's happened, and then a new trend should have formed there, and then you can enjoy that. Your fundamental, the theme should be trending to the downside as we're seeing right now with the dollar.
Yeah. And on that fundamental news, so I suppose the question I was really wanting to ask was, so how many trades would you typically be taking in a week based on, majors? You got news coming up now and again for what, at least probably one pair. How many would you be trading? How many trades would you take in a week, for example?
On average, I'm looking at about 3 trades, 3 trades. Sometimes there isn't anything at all, but on average, about 3 trades. And that's, specifically, I'm looking, obviously, as I say, the majors, I'm looking at GU, EU, and I do like Aussie as well at the moment. So, 3 trades where possible. Sometimes it doesn't happen.
Now, I think you've got a unique story in terms of being able to work in the industry in probably 2 major ways, like working for a brokerage and also working for whatever as a runner and an analyst at their first job, which is just crazy kind of experience. Now, what would you recommend somebody who's out there just working a normal sort of, boring as day job? What steps would you recommend they take to start growing an account?
Okay, it's a good question. Firstly, make sure that you can make money. Get yourself into a position where you're confident enough that you can consistently extract money from the market. So that is obviously getting a strategy in place, try and understand your fundamentals where you can. Okay, try and get yourself in a good headspace, and have a clear plan. With whatever income you're getting each. What I used to do, so every week, I'd put money into my trading account, but only once I was actually able to be consistent and extract money. So gradually build your trading account, as if you'd be putting it into your bank account. No. Put some of that into your trading account and allow that to build organically. Okay.
It's just good. Yeah, then I've had that advice before. Just put a little bit in every week. It's good advice. Now, last thing before we dive into like sort of a wrap up, few questions. Now, what about from a mindset point of view? If you had to sort of give somebody like a mindset hack to try and implement to help improve whatever they're doing around their trading, whatever's going wrong with it, what would that be?
A mindset hack.
Yeah.
Okay. If they're not in a good place right now.
Well, just something that's probably, they don't necessarily need to be in a good place. I mean, most people are not in a good place in terms of their trading. So it's probably something that's going to help improve their trading. If they could implement one little trick, one little tip, hack, something like that, something that maybe you've tried that worked.
Well, I'm going to keep it simple, mate. And it's just not risking too much in the market. Okay. As simple as that. If you don't risk too much in the market, there's going to be a big chunky amount of emotion that is completely removed from your approach. So if you can initially risk 0.25% to 0.5% per trade, I promise you're going to feel less emotion attached. And that's it. That's the first thing that popped into my head.
Yeah, that's actually very good advice. And I think people should take heed of that. Take heed of it. If you're risking 1% or 2%, then drop it back. And even if you're like trying these prop firm challenges, I mean, drop it back until you get a bit of headway, then increase it. Now, what about,
Exactly.
I mean, from a prop firm kind of point of view, I mean, what have your experiences been? Have you ever tried, are you funded or anything like that? Have you tried to go through that process?
I haven't gone through that process. No. I like the idea of prop firms. I'm very aware of them. I have several friends within the industry that are in prop firms or run prop firms. I think they're a great way to, obviously, at the end of the day, when you're trading your own capital, there's a big chunky amount of emotion and psychology attached. But when you're obviously trading the funded accounts, it removes a little bit of pressure and a little bit of that emotion. But then you've also got a situation where you want to prove these guys that you can get funded, and you want to prove yourself as a funded trader. So I like it in that aspect. The only thing is, what I don't agree with is people just rushing to keep redoing these challenges, just because it does add up and it does cost a lot of money. I know you're not putting what you'd be doing, putting the money in your account and blowing it up, but in essence, you're doing the same thing by just redepositing for these challenges. But I think they're a great tool, so long as you find the right place. And because I know there's a lot of horror stories of people not getting paid out with certain funded programs, but find the right one, and I think it's great for you. Yeah, for sure. But I personally have no experience of actually using it myself.
Okay, cool. Now what about actually, we'll just dive into a few quick fire questions and then wrap up here. So to start off with, I mean, what haven't we asked you yet? So what about a recommended book or resource?
Recommended book or resource? I'm going to say Secret. I'm going to say The Secret because, as I say, trading is, easily 90% psychology. So if you can start thinking the right way, jump into The Secret. That's it. In terms of resource, mate, on a trading front, I'm not going to sit here and reel off a ton of books because, as I say, I go back to what I said before, and I keep saying it about sound like broke record. Trading is freaking subjective. Just learn the basics, understand the workings of candlesticks, why they move the way they move, understand very basic supply and demand, and just find something that works for you and just stick to it and optimize it. Yeah. I'm not going to start giving you all trading books, The Way of the Turtle and all that crap, because you'll read it and it just goes in and out. Anyway, it goes in and out.
I mean, it's like The Secret. I read The Secret, and I think I watched the movie as well years ago. Years ago, though, it was years ago, and I don't do The Secret stuff enough, like in my day-to-day life. I mean, would you say you would be one of these people that actually still uses it?
Bro, I still use it. It's a habit. It's part of my life. So I have to. I feel like implementing that is a life hack in itself. And it makes you feel good as well. Having those affirmations, and it's crazy when you start seeing some of this shit pay off. That you're visualizing, that you're writing down. And when it starts to come into fruition, it's like, wow, this is powerful. I really encourage people to try it, even with the most smallest of goals initially, and see how it pays off and changes your mindset. So yeah, I still do it, buddy. It's part of my lifestyle.
I'm going to start doing it again. I think I'm going to start doing it again because I literally, I'll probably do it now and again. Like, okay, there's going to be a car park there for me. Like little things like that. And it's like, and most of the time it actually works. But all right, the other one is like, I'm going to score a goal today, and I picture the ball going in the back of the net, like completely.
Yes, you play football.
Yeah. Completely sort of pointless stuff. I mean, I scored an absolute worldie in the weekend. Like it was. I mean, I'll tell you afterwards because I don't want to ruin the show for everyone. But,
no, all good.
Right now, what about your preferred broker and trading platform? Look, folks, I know you want the answer to this question. Which broker is this trader using? Now, the answer has been sponsored by Black Bull Markets. So to find the answer out, you're going to need to go over to tradingnut.com, find the show notes page for this guest, and then all will be revealed. Now, do you want to walk us through your worst ever trade?
Yeah, the worst ever trade, I told you at the beginning of this, it was the Brexit, trying to anticipate that the UK were going to remain, and they didn't. And I was short GU. Yeah, I lost my account. So that was it.
And last question before we wrap up, what if there was one piece of advice you could leave our listeners, what would it be?
Don't rush the process. remember that this beautiful trading journey is, you're going to have a lot of ups and downs, and don't be so fixated on what your trading guru or your trading mentor on Instagram is doing, the lifestyle that they're living. Focus on you. Try and take some little bit of motivation or inspiration from what they're doing, but don't bypass your own process, because if you try and rush this process, it's going to absolutely destroy your enthusiasm for markets, and really hamper your progress or any opportunity for you to actually have longevity in this game. So yeah, stick to your path, and enjoy the process as well.
That is great advice. Before we wrap up, what's the best way for traders to get hold of you?
They can get hold of me on Instagram. So Real Ken Chigbo.
Well, look, folks, what we'll do is first of all say a big thanks to Ken for sharing with us today, and everything we have discussed here will be up there in the show notes, all those links to his Instagram and everything. To find them, simply search for Ken in the search box on tradingnut.com or click the links in the description. But until next time, wish all my listeners trading happiness and success. There you have it, folks. Interview done and dusted with Ken. Now, do remember, links are in the description. Whilst you're clicking down around there, hit subscribe, like, and that notifications bell, and we'll see you in the next one. Also, we've got Brandon Abbas over there on the show this week, coming up with 5-step trading plan that anyone can master, and a great way to remember it as well. So make sure you check out that video and the live streams here as well. And the new thing with the live streams, if you want to go and check out Herrera Khan on there, you'll find the link under his live stream to that new thing. I'm not going to spoil it for you. Go and check it out. Also, do remember there's that $1 trial if you do want to jump in and help us out with these Robot Lab builds, where we're building out a full-on strategy, and it's starting next week. So don't miss out. All right, folks, have a great trading week, and we'll see you in the next one.